Some worrying red days in AMC that don't seem to have a clear reason are talked about in great detail in this video. It also talks about the truth behind AMC's float, the panic of short sellers, and the pressure that keeps building below the surface. In the last 5 days, the stock has dropped more than 12%, but there hasn't been any big bad news to explain the drop. Just that alone raises red flags. Even though the market is in the red, investors and normal people who own stocks have been buying and holding. A lot of them are happy to be part of the ape nation. Then why is there a dip? Look at AMC's recent history to see that the recent drop wasn't due to a problem that was already there. It's not true at all. Things are getting better for AMC financially. They've been getting rid of debt, making things run more smoothly, and getting more done. A lot of people have been going to the movies, which is good for the houses. More people have watched AMC shows, but they have made more money because they have better margins and can keep costs down. Everything points to things getting better, from how things work to how much money people make. The stock still goes down, even with all of these good things. I'm curious about what's going on. Let's look at past patterns. More than once, the price of AMC has dropped for no clear reason right before a big move to the upside. Most of the time, these slow drops happen before big news or technology breaks. That could be what's going on again. We've seen this setup before. It looks a lot like it. The CEO of AMC, Adam Aron, has said in the past that he can't buy more shares because he knows important information that isn't available to the public. This could be the reason. I believe there is a significant event going on behind closed doors. Something that could change the value of AMC by a large amount. The company could buy back shares, sue short sellers, or even come to a deal or merge with another company after it goes public. No matter what it is, it seems important enough that the people concerned should have their own space. The float is the total number of AMC shares that are out there. This is where things become less clear. Reports you can trust and community-led studies have shown that there are more AMC-related financial products in circulation than there are float. This was shown when FTX said they had over 625 million AMC coins. It was said that each ticket was backed by one AMC share, but there were only 516 million real shares out there at the time. From what we know, FTX is said to have 121% of all of AMC stock. That doesn't even count insiders, big investors, small investors, or other ETFs. When you add up all the title claims, the number is much higher than 100%. This means that there are more shares in circulation than the law allows. That is, these are fake shares that were made using shady ways to get around the rules. Let's not make crypto bad right away. What's wrong is that blockchain-based money tools like wrap coins have been used to make fake AMC shares. The wrapped AMC code on the Solana network shows this. These aren't just ads for AMC. That's why they're meant to be used instead of real AMC shares. Some people believe that these tokens are being used to help short sellers meet their delivery requirements. This lets them hold on to their stocks longer than they should. A lot of short sales happen at the same time when the number of trades for these wrapped AMC tokens goes through the roof. That doesn't stand a chance. Short sellers are in a hurry to find deals because of this. And why do you think they need help so badly? The price of AMC has to stay low, but they have no other choice. When they borrow a share and then sell it without meaning to buy it back, they are taking a risk. They have to pay it back or cover it with more money. A short squeeze can happen if the price goes up quickly. In the past, AMC stopped going up every time it did. Right? Trading stopped, right? They are on the list. There were many times like that, and each time trades began again, the enthusiasm was gone. The more stops they use to stop it, though, the more pressure they build. That's like putting air into a rocket. Each stop only delays what is going to happen anyway. That balloon finally pops. This has been seen in GME too. Even after millions of shares were returned to loan pools, the price kept going down. That doesn't make sense. The shares that were returned might not have been the ones that were taken in the first place. Instead, they could have been new fake shares that were made. In other words, fake shares are being sent through the system. Now comes the best part. As a way to get out of having to deliver, short sellers can give the NSC what is known as an exemption instruction. To put it another way, they don't have to cover up their shortcuts. This is how they avoid dealing with the issue. But keep in mind that not covering doesn't make things go away. It just pushes it off. There's still the bill. It still needs to be bought back someday. For a short time, they can hide it, but they can't get away for good. Another important point is that big investors and hedge funds use swap contracts. Holdings are not what they seem to be because these contracts hide them. We've already talked about how bad and dangerous these swaps are. Some people who work in the financial world say that the big banks would have to report how much danger they really face from these swaps if they weren't. That's really bad. The fact that officials recently put off putting in place new rules on swaps and futures shows how unstable things are right now. When officials were asked one day when these new rules would be put into effect, they said there would be a delay or short break. Why? Because those rules would show how many banks are in danger because they have too much debt in their swap positions. If there was no risk, why would the system be slow? There really is a good chance that the dominoes will fall. These rules are in place because there is a real risk. Some financial firms have big debts that they don't want to pay, and they might fail if the market changes quickly. It all comes back to AMC, which has a lot of fake shares, unclear wrap tokens, loopholes that are being abused, and swaps that hide risk. All of this points to a system that is stuck and running out of time. Most people who want to buy are now past that time bomb. The bigger view. That is, the cracks can be seen, even though they are small. The sellers keep tricking and stalling. There is only a short time for each fake share, secret swap, and exemption. In the end, one of those patches gives way. Things have been getting tougher for AMC slowly but surely. It might blow up when it does. We still stand by what we said before. Shorts can fool some people for a while, but not all the time. They are going up against a business base that is strong and growing. They do more than just buy stocks. They make time go by too. One small mistake will eventually set off a chain of events that can't be stopped. It could be against the law. It's possible that the company has run out of money or can't pay anymore. AMC will benefit greatly when the event is over, no matter what causes it. Guys, that's all we have for you today. You think about the stock of AMC. Click on the link below and tell us what you think. Thanks for looking at it.